60 seconds to understand why regulators are paying closer attention to Bitcoin. When regulators talk about Bitcoin, their focus is no longer just on what it is, but on how significant its influence has become. With the increase in Bitcoin's trading volume, rapid growth in user numbers, and the entry of more and more traditional financial institutions, regulators have begun to realize that this emerging market can no longer be ignored. First, Bitcoin is a digital asset that can be circulated globally, unrestricted by the traditional financial system. While this enhances financial efficiency and the convenience of cross-border payments, it also brings certain risks, such as money laundering, fraud, or illicit fund flows. To protect investors and prevent financial crime, it's natural for regulatory bodies to step in and establish rules. Second, as more and more ordinary people start to engage with Bitcoin, whether for investment, as a store of value, or as a payment tool, the government has a responsibility to ensure that these trading platforms or service providers are safe and reliable, and have the capability to safeguard user funds and personal data. This, in turn, has prompted the gradual establishment of a regulatory framework. Finally, the Bitcoin market is highly volatile, and its influence on the broader financial market is growing. If a systemic risk were to emerge, such as the collapse of a major exchange or abnormal capital flows, it could potentially impact the traditional financial system. Therefore, the purpose of regulation is not to suppress innovation, but to establish a more transparent and trustworthy market mechanism. The emergence of regulation is, in fact, helping the industry to develop in a healthier and more sustainable way over the long term. Through a compliant environment, users can participate with greater confidence, and the true potential of crypto assets can be realized. Explore more crypto knowledge with OSL Crypto Bits. Ready to dive in? Register on OSL now and start your journey.